Okay, firstly we are going to do a two notes, which is owner's equity, and the other one is trade and other creditors, and lastly we're going to do what we call a balance sheet or statement of financial position. Okay, with me here I took one of the questions from our study guide, guys. So if you want to purchase a study guide, make sure that you contact us. It's only 100 rand a soft copy, so that you can get questions like this one, so that you can prepare yourself. All right, let's go through the required part. Prepare the following notes to the financial statement. Number 1, owner's equity, 4 marks. Number 2 is trade and other payable, 18 marks. Okay, and the balance sheet, it was only 10 marks because most of the things we have done it under the notes. Okay, this question contained 36 marks and you are given only 29 minutes. Okay, now let's start with these two notes. Let's go to the information. Okay, information. They said Baba Dealers extract of post closing trial balance on 28 February 2018. Our year is ending 28 February 2018. Okay, and we have given a balance sheet account section. We have a loan, consumable store on hand, debtors control, accrued income, accrued expense, prepaid expense, income received in advance, overdraft, and creditors control. You must know which one fall here, which one fall here, and which one goes straight to the balance sheet. You must know all that. Okay, now let's start. Let's start with these two notes. A very simple one, which is owner's equity. The first one, we call it owner's equity. Okay, guys, this note format, you need to make sure that you know it with your all heart, because otherwise you're going to complicate things. Guys, we need to start by the balance at the beginning. We go to net profit for the year, additional capital, drawings, and balance at the end. Okay, now if you know this format, it's going to be very simple for you, because you will just check on the additional information. Do we have net profit for the year? You just record. Do we have additional capital? You record drawings, just like that. Okay, normally balance at the beginning is usually given, but in other case you will find that it's not given. It will be given as capital. Okay, now let's check on this case. If you check on our trial balance, we don't have it. Okay, so what we had on our answer book, they give us balance at the end, which is this one. Okay, this one, don't worry about it. It was there on your answer book. As you know that in accounting, they provide answer book. Okay, this was given, but this one, it was not given. We have to calculate it. In other question papers, if you check other videos, you will find that this was given and this was not given. I'm going to teach you how to calculate it. Okay, now let's check the other transaction. Number 1, the net profit calculated in the income statement, it was 397,695. This one, we just copy it as it is. There is no opening brackets and do calculation in grade 10. Okay, it's gonna be 397 and 695. All right, it will be given like this. Now let's check if we have additional information and the drawings. Okay, number 2, the owner increased his capital contribution during the year by 70,000. Additional contribution, very simple. The owner contributed additional capital and is going to increase. But drawings, guys, it must have a negative, because he's withdrawing and take it outside the business. That's why it has a negative. Negative indicate a minus. Okay, let's check. Number 3, the owner withdrew 25,000 during the financial year. But guys, this one of drawings usually start here, because sometimes you will find that on your trial balance it is given, which means that you must take the one that is given plus 25,000 of additional information. Then it's gonna give you total of 25,000, because in this case we were not given the other one on the trial balance. Okay, now because we have this all balances. We want this one. We have to calculate this balance as a balancing figure. How? You take this one, because now we are doing a reverse, we must change this sign. You take this one, you said plus, because this one is negative. The rest, which is positive, you must make them a negative, which means that you're going to say 638 plus 25 minus 70 minus 397, which is going to give you amount of 195,630. So if you take this one plus this one plus this one minus this one, it must give you this one. That's how you confirm. So this note, it was containing only a 4 marks in this case, but in other question papers you will find that they give 10, 15. So it depends on the province and the question paper on the specific time. Okay, now let's go to the next one. Okay, the next one is trade and other payables. Guys, before I forgot, we are almost at 1 million view. So in order for us to celebrate this 1 million view, we want you guys to send a clip of a video which you are just going to say, congratulations Accounting Solution SA for reaching 1 million views. Maybe you can just mention your name and your school, or maybe a province, but make sure that your video does not exceed a 10-second. Okay, please make sure that you do that and send me a short video clip on WhatsApp. You can do it with your friend at school, or you can do it at home, anywhere. Okay, just make sure that you do that, so that on the next video that we are going to upload, we are going to upload those clips as well, so that you can see yourself as well on this YouTube channel. And please make sure that you send before 15th of August 2024. Okay, before 15th of August. If you watch this video after 15th of August, guys, don't send it. We will already close everything. Okay, now let's proceed to this notes, trade and other payable. Okay, you must know the format first. We start with trade creditors, accrued expense, income received in advance, pay as you earn, pension fund, medical aid, unemployment insurance fund, creditor salaries. Okay, now we have to work out this all item. Very simple, because now if you know you have this format, you are just going to check transaction related to it and you record. Okay, let's take on the trial balance first. Okay, we have creditors control, which we have to open a balance and say 23,400, and accrued expense we have it. Okay, but for this one we don't have any other adjustment in this case, so we're just gonna write them. Accrued income received in advance 4,700. Okay, then you pay as you earn, pension fund, and those other things. Let me check quick. Okay, this one we are going to face them under additional adjustment number 6. Okay, yes, number 6. Okay, J. Smith joined Barber Dealers on 1 February 2018, and they say the finance department left him out for February payroll by mistake, and the detail of his salary are as follow. Gross salary, it was 15,000. Deduction, we have pay as you earn, pension fund, medical aid, and UIF. That's what we need to record here. But we have to make sure that when we record those deductions, we also have to include contribution. Okay, let's check the information of contribution. The business also contribute toward the pension fund 7.5 of gross salary, and medical aid for every R100 the business contribute 150, and UIF is on rand basis. This is what you need to do first. You open brackets for 3 of them, and you first copy the one of deduction. Pay as you earn. Okay, pay as you earn is only one, because the employer does not contribute any further for this one. Pension fund, is 1,500 and medical aid is 2,000 and UIF, okay, UIF UIF is how much? Is 150. Okay, now let's read the transaction. Okay, the transaction said the pension fund of 7.5, the employer contributes 7.5% of gross. Gross is 15,000. We're gonna say 15,000 multiplied by 7.5 over 100, and we're gonna get amount of plus 1,125. You add deduction with contribution and you're gonna get 2,625 and medical aid. Okay, let's read first. They said medical aid for R100, the business contribute 150. You just multiply the one that we have, 2,000, multiply by what the employer contribute, R150, and it's gonna give you 3,000, which means that this side we're gonna get 5,000. Okay, and the UIF they said on rent to rent basis. Rent to rent basis, let me rub here. Rent on rent basis simply means that they are going to contribute the same amount that the employee contributed, which means that it's going to be the same 150 plus 150, which is going to give us 300. Okay, then the last one we have to go back to trade creditors. Trade creditors, we have additional information number 4. The data with credit balance of 900 should be transferred to creditors. So in other words, the data who owe us, we now owe him 900, which means that it must be added 900 and it's gonna give us 24,300. Okay, if we add everything here, how many of them? 1 2 3 4 5 6 7 8. 1 2 3 4 5 6 7. Okay, we also have creditors for salaries. Creditors for salary is a net salary of employee who were not paid, the one that we were reading under additional information number 6. Okay, they said J. Smith joined Barbadilla on 1 February and the Department of Finance left him out. He was not paid. So creditors for salary, we owe this employee amount of 7,850. Okay, and now we have to add them, all of them, then it's going to give us 50,575, just like that. All right, moving to the next one now. We have to go to the balance sheet. Guys, for those who want to attend our extra class, they are still available. Only R100 per subject. If you want to attend accounting, economics, business, mathematics or mathematical literacy, all of them, they are available. Only R100 per month per subject. Make sure that you join so that you can learn with other students as well. Okay, now let's go to the balance sheet. Okay, the balance sheet, remember, we already drafted the notes of owner's equity and trade and other payable, which means that we can start with those balance. Owner's equity, we got amount of 6. We just take this one as it is, 638, 325. And trade and other payable, we record it as 50,575. We just record it as it is. Okay, which means that now we're left with current portion of a loan, bank overdraft, and the other loan, because balance sheet, they said we need to prepare equity and liability section only. Okay, now let's take the issue of loan number 5. The following relate to loan from B bank. They said the balance, it was 60,000 and the repayment include interest, it was 21 and interest is 7,000 and the balance at the end it was not given, and we have to start with it here, the balance at the end. Then we subtract what? Current portion of a loan, and we put it here. Okay, how do we calculate the balance at the end? It's very simple. 60,000 minus 21 plus 7,000. Okay, let me show calculation here. You say 60,000 minus repayment plus interest. Why plus interest? Interest increase liability. Repayment decrease liability. That's why we subtract. Okay. Then it's gonna give you amount of 46,000. Okay. Now let's read the transaction 5 again. The payment of 14,000 will be made during next financial year on the loan. This is repayment that is going to be paid within 12 months, which means that it must come out here and go away in a short term, because it's no longer long term. Here non-current, we put long term, current, short term. Minus 14,000, we put it here, 14,000, which means that this side we're gonna left with amount of 32,000. Okay, and then the last one that we left with is bank overdraft. Okay, if you check on our table, we have bank overdraft of 29,000. There is no any other transaction in this case. Okay, which means that after that you just need to add all current liability, and you get total here of 93,575. Here it will be 32,000. Here it will be the same, 638, 325. Okay, this is total equity. Then if you add all of them, they are going to give you 763,900. Very simple and straightforward. They say Kingston Traders, information related to financial year end 29 February 2020. Goods are sold at a markup of 40% on cost. Once they give you that statement on top, guys, just know that it's going to affect this first part of income statement. Remember, as I said on the previous video, guys, you need to know the format of income statement. This structure is a skeleton. You need to know it. No one is going to teach you a skeleton. A skeleton, you need to sit down, guys, and cram with understanding that, okay, under income statement, we start with sales, we go to cost of sales, we get a gross profit, and after that we go to other operating income and we list them. Operating expenses, we list them. Then we go to the last part of operating profit, interest income, profit before interest expense, then the last one is profit for the year end. You need to know this format, guys, before anything else. That's the format that you need to know. Okay, so now let's go back to this question paper. Remember I said that if they give you a markup, just know that there are some calculations that you are going to deal with. Okay, required, prepare income statement or statement of comprehensive income, okay, for the year end 29 February 2020. 45 marks. 45 marks. Imagine. That's a lot of marks. Okay. Then they give you a pre-trial adjustment for 29 February 2020. Start from capital until a bad debt. But remember, a major amount that is going to affect the income statement is start from sales. Even on the trial balance, it starts from sales. Even though interest income, interest expense, something like a bad debt adjustment, it may also require you to go to balance sheet section. Okay, now let's first focus on this part. Let's start from sales. A sales amount that is given here, guys, you can see that is 950,000. Okay, the first things that you need to do before you even rush here, open a bracket and say 950,000. and check if you have any additional information which is going to affect our sales. If there is none, now you can go back and subtract debtors allowance. Debtors allowance is a return, customer return goods. We have to subtract because it's no longer sale. Customer have returned those goods. Okay, at transaction number 1, they said cash sales of 18,200 on 29 February 2020 has not been recorded. It was not recorded. We have to add it. This sales was not recorded. 18,200. Then after that, we can go and subtract our debtors allowance minus a debtors allowance of 14,000. 14,000. Why did we record this 18,200 as it is under sales? Because it's a selling price. But when we go to cost of sales, we have to apply a markup and add it as well, because once you sell, a cost of sales must also affect it. It must also increase. Okay, our cost of sales under trial balance is 400,000 plus this 18,200. You must first convert it into what? Into cost of sales using a markup. Because we are going down to cost of sales, we're gonna say 100 on top, and it's always 100, guys, plus a markup of 40%, which is going to give us 140. 140. Then our cost of sales will be amount of 13,000. 13,000. We convert this into cost of sales, just like that. Okay. Now let's calculate a total here. 954,200, and we subtract 413, and after that a gross profit. This one minus this one is gonna give us a gross profit of 541,200, just like that. Okay, then other income, other operating income, this is the total. I was supposed to draw a line like this. Then this one that you see here, guys, it was given on the answer book. Okay, now let's move on to the next one. We are done with this first part. Now we are going to look at the operating income and expenses at the same time. Okay, now from debtors allowance, we found a salaries and wages, which is 168,000. Salaries and wages is under expenses, 168,000. Okay, and the next one, guys, you just gonna, now you are going to take all income and expense, and you just open a bracket and you write them here, 1 mark, just to copy and paste, 1 mark. Then next one, fee income is here, and the amount of fee income is 82,600. Okay, and it's 1 mark, just 1 mark. Just know that all amount that I'm writing is 1 mark. Okay, the next one, interest income, 900. Okay, and the other one, consumable store, 5,500. Consumable store is here, 5,500. 1 mark. Okay, and the next one, rent income, 39,000. 39,000. It's before you even read your transaction. 1 mark, another mark. Okay, then interest on fixed deposit is part of interest income, which means that you are going to add 1,870. Okay, and the next one, discount allowed, it was recorded, there was no mark. Discount received was recorded, no mark. A telephone, 9,200. Where is telephone? Where is telephone? Telephone is 9,200 under expense. Telephone, we open and you see 9,200. Okay, and the next one, stationery. Stationery is here, 8,800. Okay, and the other one, Insurance is here, 16,800, and the other one is bed aids. The last one, bed aids, is how much? 1,300. You already in a lot of marks, guys. Just to copy and paste those amount. Now, moving forward, let's check. We're going to transaction number 2 because number 1 we already covered it on top. They say a fee income of 2,400 is still outstanding for the period. If they said it's still outstanding, which means that we have to record it. It's not yet recorded. Remember, the major purpose is to make sure that we record everything, whether it's paid or not. It has to make a 12 month. And we have to make sure that we record everything that belongs to our reporting period. Our reporting period is ending 2020 on February, which means that after this, we don't record. Anything that has been paid after this, we don't record. We have to subtract them if it has been recorded. Okay, we have to cut off until 28 February. From 1 March 2020, no, it does not belong here. We subtract. This one is still outstanding. It's a fee income. We have to add it. It's how much? Fee income is 2,400. 2,400. We have to add it, and it's gonna give us how much? 85,000. 85,000. Okay, and the next one, insurance. They said insurance include monthly payment up to 30 April 2020. You see now, our cutoff is 28 February, but they recorded March and April because they said up to April, which means that they added 2 months, which does not belong here. Where is insurance? Where is insurance? There it is. We have to subtract those 2 months. How do we find those 2 months? This 16,800, guys, is for 14 months because they also added 2 extra. Normally, it's 12 plus extra 2 is 14. If you say this one divided by 14, you're gonna get amount of 1 month, which is 1,200. 1,200. We have to subtract it twice. Why? Because the other one is for March, the other one is for April, because they recorded up to April. And you're gonna get amount of where is it? Insurance. Let me check my calculation. 14,400. Okay, as long as you understand the principle, guys, because it can happen that this calculation I already calculated them, which means that I can do a mistake like this. You find that I recorded it under some way. Do your own calculation and make sure that you verify. If you find a mistake, just listen to the principle. Don't tell me on the comment section or say you did a mistake, because this video is not going to be repeated again. Okay, just make sure that you recalculate your things properly and make sure that you follow the procedure and the principle that we are teaching you, because that's the most important part. Okay, now moving forward to the next one. One employee ICOOL has been left out of the salary journal in error. Okay, and they said the detail of the salary was as follows. They didn't give us a gross salary. They gave us net, pay as you earn, UIF, and pension fund. Okay, this salary was supposed to be added. It was left out, which means that we have to add because it's for this year. So what do you do now? Which one do you add? UIF, pay as you earn, or net salary? You add a gross, which means that you have to add all those amount, 7,300, 2.2, 400, and 100, which is going to give you 10,000. Then it is gonna give you 178,000. Okay, and the next one, depreciation on vehicle is 32,000, equipment 17,100, must be written off. We're just going to add those 2 amounts. Depreciation is an expense. Okay, you're gonna add 32,000 plus 17,100, and it's gonna give you 49,000. what is it? 49,100. All right. Then we are going to the next one. The next one, they said that interest on loan for the year amounted to 30,800. Interest on loan is interest expense. Interest expense, and must be written as a bracket inside the brackets. 10,000, 30,800. Okay. Then the other one, they say the bad debts of 700 must be written off. We are just going to add, what is bad debts? Plus 700. Okay, it's gonna give us 2,000. And the other one, rent was received for 13 months. Is it correct to receive rent for 13 months? No. We have to receive for 12. One must be removed. How do we remove one? 39,000 divided by 13, and you're gonna get amount of 3,000 of 1 month. And you remove that 1 month of 3,000, and you get 36,000. Just like that. Very simple and straightforward. So the next one, before we go to the next one, guys, those who want to attend our extra class, please make sure that you contact us as early as possible. Now we are offering a different subject, guys. When you come, please specify that this 100 Rand is for economics, this 100 Rand is for accounting, is for maths literacy, and so on, so that we can add you to a correct group and you learn with other students. Now we are attending twice, guys, because we have increased the price to 100 Rand per month. You attend twice every week. Okay. And also, before I forgot, guys, a study guide for grade 10 is available. It took very long time due to a process of editing, verification. So the study guide that we have for now is only soft copy, which is costing only 100 Rand. The reason is because, guys, we did a lot of quotation. We want to print it out so that you can get a hard copy. It's very expensive, very, very expensive. So we don't want you guys to pay a lot of money for now. Let's just be patient and buy a soft copy, which is take a lot of time for us to build it up, to make sure that we simplify for you, and so on, so that you can practice and get more knowledge. So the study guide is available now. You can contact us on WhatsApp. Okay. Now the next one, a fiscal count of stock revealed the following stock on hand. Trading stock of 220 and unused consumable stock is 500. Okay. Now let's start with a consumable store. Consumable store on hand that we have, guys, we have to subtract. We have it on hand at the year end, which means that we are not going to use it for this year. We're going to use it next year. We have to subtract it. It does not belong here because it's going to be used next year. Minus 500, which is going to give us 5,000. Okay. And the next one, trading stock surplus, which sometimes it can be deficit. Okay, but in this case, it was a surplus, and I will explain why. At the beginning of the year, we have a trading stock of 231,000 stock, and during the year, there is a stock which has been sold, which was not recorded, which is this one, which means that it was already out, minus 13,000. So if you do this calculation, okay, let me calculate so that I can explain properly. 231,000 minus 13,000. It was 218,000. If you subtract these two, you're gonna get 218,000. And at the year end, we found that our value of stock is 220, which means that the value of the year end, it was more than this one, which means that it is more like what is a profit, because the stock reveal what a higher amount. If it's revealed the less amount, it's a deficit. Okay, so now we get a surplus, and now we have to minus 220 so that we can see how much surplus. It's gonna be 2000 surplus. Okay, then after that, guys, you need to calculate your operating income, which is going to give you 123,880. Okay, and all your expenses, which one we didn't close? This one is 9,200. Okay, you need to verify on your side, guys, as well. Expenses, this side will be, you just add all this amount and you will get, okay, well, 178, 14,400, 2,000, 5,000, 49. Okay, it's gonna be 258, 560, 258, 560 plus 9,200, and it's gonna be 267, 760. Okay, then after that we have to determine, okay, this one is operating expenses, 267, 760, and this one gross operating income, guys. You just need to add this one plus this one, which is going to give you, I think this one I already calculated it. Let me check. It's gonna give you 665,030. Okay, then after that, this one minus this one, and need to calculate 665,030 minus 267, 760, which is going to give you operating profit of 397,270. Okay, then interest income, we're going to add it, which is how much? 277, and this one is positive, guys, because it's income. Okay, then which means that we are going to add 2770, which is going to give us 440. Okay, and the last one, you subtract interest expense of 3,800. You're gonna get 369, 240. Okay, this is 240. Okay, that's how you do income statement, guys. I hope you learned something. Please, guys, I know that some of you haven't subscribed to this channel and you are delaying yourself because some of the video are not going to appear on your playlist of grade 11. So make sure that you subscribe so that as many as possible video can appeal on your side as well, because some videos are made for public, some videos are made for subscribers. Fixed assets and internal control. The following information is given for you TH traders whose financial year end is on 28 February 2019. Okay, and they say that the extract from trial balance, they give us vehicle cost price and equipment and the accumulated depreciation for both vehicle and equipment. Additional information. A. Depreciation is calculated as follows. Depreciation is 20% per annum using a straight line method or cost price method. Okay, equipment, we use diminishing balance method. So basically, these two different methods, the first difference is that when we calculate a cost price, we only use what we call a cost price. We don't subtract accumulated depreciation. But when it comes to diminishing, we must first subtract the previous accumulated depreciation so that we can get what? Our depreciation. All right. Then the other different in this case is that the percentage that they give us is not the same. The other one is 20%, the other one is 15%. Okay. B, a new vehicle was purchased on 1 November 2018 for 150 cash. It was properly recorded. Take note of that. We're going to use it. 4.2.1, calculate depreciation for new vehicle purchased. Okay, it's number 4.2.1. We're going to calculate depreciation for the new vehicle which was purchased. So 5 marks for that. Okay, so now how are we going to calculate this new vehicle? A new vehicle which was purchased, we know that it's on information number B. A new vehicle was purchased on 1 March by amount of 150,000. And remember, they say that a vehicle, we have to use a cost price, which means that no need to subtract depreciation when we calculate what? A cost price method. So which means that we just have to multiply by 20%. 20%. Now we have another issue. This vehicle was purchased during the year. It never stays for 12 months, which means that we have to multiply by number of months that this vehicle has stayed. It's always multiplied by a number of months that we're going to count, divide by 12. Okay, let's count those months. It was purchased 1 November and our year is ending 28 February, which means that it's going to be November, December, January, February, 4 months. Okay, which means that if we do this calculation, it's going to give us amount of 10,000. Then it will be done. 5 marks. Free 5 marks. Once they say that a vehicle, equipment, any asset that was bought during the year, make sure that you count a month so that you can get exactly correct the answer of the depreciation. Okay, 4.2.2, calculate depreciation for old vehicle. 4.2.2, old vehicle. Remember, we calculated for new vehicle. Now we have to calculate for old. How do we calculate for old? Number 1, the one which was recorded on top is 250,000, but this 250,000 has included a new one because the new one, they said it was properly recorded. We must subtract it first because we have already recorded it. We must subtract 150,000 so that we can left with what? 100,000 of the old one. Then we multiply by 20%. Okay, which is going to give us 20,000. Another 5 marks for free. Okay, now moving to the next one. Calculate depreciation for equipment for the year. Now we are done with vehicles, we are going to equipment. 4.2.3, equipment. Let's take equipment price. It was 210, the cost price and accumulated is 16,000. Remember, we are using diminishing balance, and diminishing balance or carrying value method, we have to take what? Cost minus accumulated before we multiply by the percentage. And the cost price is how much? It's 250,000. Then we said minus 16 of accumulated. Then after that we're gonna get amount of 194,000. Then we multiply by 15%. For equipment it's 15%. Then we're gonna get amount of 29,100. Then it was allocated 5 marks. These things are free marks, guys. Free marks. Diminishing balance method. Subtract the previous accumulated first. Cost price, just multiply by the percentage only. Unless if it is new, that's where you're going to do it, to multiply a month. A very simple stuff. Okay, before we go to the last one, if you have been watching my channel for a very long time, guys, please subscribe. Let's reach 25,000 subscribers in 2024, so that next year by 2025, when you go to grade 11, we'll be celebrating a 50,000. So it's possible if you subscribe. And also guys, those who want to join our extra class where you will be able to get consultants on WhatsApp and what, please make sure that you text us on time, communicate with your parents that we have online class from Accounting Solution SA that can assist us with accounting until we reach grade 12 so that we can get a distinctions. So you have to join from now so that we can teach you from basic until grade 12. Okay, the last one, they said provide two control measure to be put in a place to guard against the abuse of vehicle. Okay, the question was say that provide the two control measure that the owner can put into place as he is concerned that some of the employees are abusing the vehicle. Okay, now the owner noticed that some employees are abusing vehicle and equipment and there is no measure. Let's put a measure. We want 2 points in this case. 4.2.4. Number 1. We have to make sure that we have a logbook. In other words, a person or employee must sign in and out. Must sign in and out. You don't have just to drive a car of the business without signing in. We have to sign in so that we can see that, oh, Nandipa is the one who was using the vehicle. So if the petrol is overused, we are going to blame her. So that's how this measure works. Okay, number 2, they call the vehicle and equipment in a safe place. Like we have to make sure that we have a packing for vehicle where we put our equipment are very safe, no one can steal it. So that's how we can do it, to put a control so that we can have a good control in our business. Analysis. Okay, then they say payable store is a clothing store that sell a cheap imported clothes manufactured in China and their markup is on the cost price of 75%. Okay, use the given information to answer the question that follow. Payable store, extract from income statement for the year ended 30 June 2019. Sales up to net profit. They give us the column of 2019 and 2018. But in this question, they said calculate for 2019. Okay, and they also give us results for 2018 so that we can compare because we are required to comment. 4.3.1, calculate the percentage gross profit on sales for 2019. Compare the results with 2018 and quote to the figure. Guys, each and every ratio that says gross profit on what, operating profit on what, they are saying that whatever that they say first, they are saying that when they said on, they are saying that divided by it. For example, 4.2.1, 4.3.1, they said a gross profit on sales simply means that we have to take a gross profit and we divide it by sales. Then lastly, you just multiply by 100. On, it simply means that divide. Okay, now let's take a gross profit. So in this case, gross profit is not given, but it's simple to calculate because we know that sales minus cost of sales is gross profit, which means that you have to take 1,280,000 minus 800,000. Then it's gonna give you a gross profit of 480,000. And our sales, it was given, we just have to divide by 1,280,000 and we multiply by 100 so that we can get the percentage. Then the percentage is 37.5%. Okay, now they say that we need to comment. Okay, let's comment here based on the previous results of this ratio of last year. They say that gross profit on sales last year it was 4.9. Now it's go to 3.7, which means that we are going to comment that there is a decrease. there is a decrease on gross profit on sales. Then we said from 41.9 to 37.5. So it's bad. It's very bad because it's indicating that gross profit is now down. Okay, the next one, they said that we have to calculate percentage on operating expense on sales. Operating expense divided by sales. Okay, then it's 4.3.2 operating expense divided by sales. Then we multiply by 100. Okay, then our operating expense, it is not given, but it's simple to calculate. You just take other operating income of 409,200 minus operating profit of 390,400. Then it's gonna give you 118,800, and you divide it by sales of 1,280,000, and you multiply by 100. Then it's gonna give you 9.3%. Now let's comment based on last year. Last year it was 9.5. 9.5% to 9.3%. Is this good or bad? It's good, guys, because here we're talking about expense. We want expense to go down as much as possible so that we can get more profit. So it's good. This decrease in expense is good. It's only bad in terms of profit. Okay, and the next one, 4.3.3, a net profit on sales. That's what we are going to calculate. Net profit on sales. We're going to take our net profit divided by sales, multiply by 100. Then our net profit is 389,550 divided by sales of 1,280 multiplied by 100 is equal to 30.4%. Okay, let's compare to the one from last year. From last year, it was 35. From 35.1 to 30.4. This is a decrease. So decrease of net profit is not good. Profit, we want it to be more and more and more. So this is how we were calculating this on this question paper. Please make sure that you subscribe, you like, and those who want to join extra class, it's only R100 per month. Do so that you can attend with other students. And those who want a question paper like this, make sure that you purchase our study guide. Only R100, a soft copy. We don't do hard copy because it's gonna be expensive to print out. So I'm gonna see you on the next one.